Why do I believe that the bulls today are getting a little bit too bullish in the stock market? I have to look at all of the world news and all of the economic world news because of my job at TRADEway. And so I write articles to all of our clients, tens of thousands of clients, telling them where I think the market is and where I think it's going and why. I write articles about things you may not even know what they mean, but they predict recessions, things like an inverted yield curve, things like the Fed artificially raising interest rates and thereby lowering the monetary supply so there's not as much money going around the economy. People can't get loans for a house or a car. Businesses can't get loans to expand. Some businesses that aren't even making money yet can't get their loans renewed, so they go belly up and people lose their jobs and it becomes a cycle. People being laid off, tens of thousands were laid off in 2023, and still the first month of this year, same thing still going on. Now, all of a sudden, these companies don't have people to sell products to because they laid them off. They don't have a job. They can't buy the products. So now the companies go under. And then you have banks go under. Mainly what I want to do is scare you. I want to put fear under you because if you own a 401k, which everybody does, or an IRA, I know what they teach universally: buy and hold. Stay in, leave your money in, it'll always come back. And that is not always true, not in your lifetime anyway. In the year 2000, if you had just left your money in the market in that crash, it took 15 years for the NASDAQ just to get back where it was before the crash, which means you didn't make any money for 15 years. What if you were 65 or 70 when that happened? You didn't make it back in your lifetime. The inverted yield curve and the leading indicator that the conference board puts out, they are so accurate and they're both flashing red. Recession, and have been all through 2023. Now there's a lag when it finally hits the stock market, but it's been well over like a year and a half. These things have been flashing recession. Most people don't know anything about it, but this is what's happening. Now, if you put on top of that, you've got 4 wars going on, maybe 5 at this time. You got Israel in a war for its life, all right? You've got the Houthis that are working for Iran that are attacking ships that have all the containers bringing all the products to the United States have to go through the Suez Canal and the Red Sea. They can't go through there, so they got to go around, which is adding huge amount of cost. These economists that I'm reading are saying it's going to add 25% to the price of products, almost every product we have in the United States. Tell me that inflation's not going to start going back up right at the time they think they've solved that problem. That's going on. You've got Pakistan and Iran just went to war together. And then you've got China always threatening to attack Taiwan. Now, I want you to think about something. There are 5 stocks right now that are driving the entire market. The tech stocks, right? I won't name them. You know what they are. Do you know that they buy 90% of their chips from Taiwan? China has been running warplanes up into the edge of Taiwan's airspace and back home almost every day for over a year, threatening to go to war with them. What if they do the same thing that's happening with Israel and Hamas, or the same thing? I didn't even mention, the Russian war. Well, the first reason that I think the bulls are too bullish right now is that inflation is not cured. The whole move up in the stock market recently has been because they've convinced themselves that the Fed is done raising interest rates. They think the Fed has cured the inflation problem. Well, if you got a problem in the Red Sea and the Suez Canal and all those container ships are adding 23% to the cost of every product, do you really think inflation is cured? No. So that's the first reason I think they're too bullish right now. Okay, now I'm not the only one. The greatest, biggest fund management company in the world is BlackRock. By the way, I happen to know the man that taught the owner of BlackRock everything he knows about bond trading. Is pretty cool. Here's what they're saying right now. Investors bet on U.S. interest rate cuts could prove excessive once inflation turns out to be stickier than anticipated. And the vice president is named Mr. Hildebrand, and he has warned that investors will soon enough find out that this outlook is mistaken, that inflation is cured, is mistaken. So if inflation is not cured, they're going to have to raise rates again, and it always kills the stock market. The second reason that I believe bulls are too bullish right now is because the greatest recession indicator that's been 100% accurate for the past 58 years is flashing recession. And it's the yield curve inversion that I mentioned earlier. Right now, it's the steepest inversion of the Treasury yield in more than 4 decades. They're pegging a probability of recession at more than 62% right now. The third reason that I believe the bulls are too bullish is because of the Conference Board's leading indicator. This little graph shows this leading indicator, and you can see this little red line going across here. And right below that red line is where the leading indicator has moved below that line. And when it gets below that line, it indicates that a recession is less than 12 months away. That means sometime in 2024, there will be a recession. This indicator has only missed once in the last more than 50 years. It's only missed one time. And every other time it's indicated recession, we have had a recession. And so the Conference Board stated on themselves, they stated on January 22nd that overall we expect GDP growth to turn negative in the second or third quarter of 2024. That means recession. When the GDP, the production of the United States, goes to negative numbers, we're in a recession. They expect that by the second or third quarter, or actually both, second and third quarter, they say, to begin to recover late in the year. So they think we'll have a recession by the second and third quarter, and maybe by the end of 2024, we start to come out of that recession. So at this point, you might be thinking, why are we talking about all this technical stuff about bulls and bear markets? If you could make informed decisions about what the market is doing, then that gives you the power to maximize your gains and minimize your losses, and then compound that extra money through the generations, especially if you teach these skill sets to your kids and grandkids. That's what TRADEway is all about, so keep listening. Now, the fourth reason I think the bulls are too bullish is because the valuations of the 7 stocks that are driving the whole market are too high. Now, it's always been bad when the market is thin. And by that, I mean, instead of having hundreds of stocks that are moving up and strong, we have 7. I've never in my life, and I've done this 40 years, I have never seen a bull market, a real bull market, start with only 7 stocks that drive it. And certainly it won't continue. That's what I call a rally attempt. I don't call that a new bull market. You got 7 stocks. Now, they get 90% of their chips from Taiwan, which imminently will be attacked by China. And we'll see, let's hope we have a strong president when that happens. But these stocks are way overvalued. In fact, I clipped an article just a couple of days ago. It said the 7 tech stocks that are driving the market were trading this week at an average of about 33 times expected earnings. That means these stocks are priced more heavily than they should be. They're not worth what the price is of the stock. Even after the market-wide rally in December, market concentration in a handful of mega caps, firms with, huge capitalizations, the values of these remain high, BlackRock strategists said in this recent note that I clipped. So these stocks are overvalued. Even the normal stocks out there that aren't these 7 that drive the market, they're trading at 20 times expected earnings when the norm is 15. This just shows these are overpriced. Well, when stocks stay overpriced for very long, you have a bearish move in the market. Now, the 5th reason that I think the bulls are too bullish right now is because the Fed has been decreasing the monetary supply. There are a couple of amazing people. There's one named Steve Hanks, who's professor of applied economics at Johns Hopkins University. He's also Ronald Reagan's advisor back in the day. And his view is that the volatile inflation of the recent years, he says it's because the Fed has printed so much money. You and I feel that, don't we? If you look at a curve of the money supply for my whole lifetime, and then you just look at from COVID till now, it goes like this. They printed trillions of dollars. Well, you can't print that much money without eventually creating inflation, and that's why we had 9% inflation last year. And so they had to try to curb that, so they've been raising the rates to do it. So every time they start to raise the rates, it lowers the monetary supply. Some of these great economists studied under a guy named Milton Friedman. If you've never listened to him, go out to YouTube and look him up and listen to him. He's a great conservative economist. But he taught long ago that inflation is always and everywhere a monetary phenomenon. That's why these guys are forecasting a recession, because the monetary supply has been lowered more than it has in many, many decades. So here's my 6th reason I think the bulls are too bullish. The world, frankly, is in a mess right now. and Wall Street isn't paying attention. Now, that's actually not my phrase. That is the title of an article by CNN written on January 23rd. It says geopolitical tensions are growing and Wall Street appears to not be understanding their potential impact on the global economy and the markets. And then it goes and it lists everything from Russia attacking Ukraine to the Middle East to the problem with China, all these wars that are going on around us. And it says, what people don't understand is this is affecting the shipping lanes, which is affecting the price of every product that Americans can buy. But worse than that, they talk about that these developments, and I'm going to quote here, these developments have accelerated global fragmentation and the emergence of competing geopolitical and economic blocs. What do they mean by that? Well, in most of my life, starting with Richard Nixon anyway, he made friends with China. We began to let them create and manufacture things because the whole world can get better prices, and it just blossomed the economies of the West. Well, now we don't have that friendship with China, do we? And rightfully so. But now we've even got, trouble with Europe. We got trouble with the Middle East. And so now what's happening is every nation is beginning to just withdraw inward and just selling products to itself. There is no way in the world that you can keep the economy that we're all used to having if we don't have exchange through the free markets of the whole world. So there's no more free market is the problem. And this is huge. I don't even have time to go into it, but this is my sixth reason why I believe the bulls are too bullish right now. They're not paying any attention to the wars. The stock market's just going up and up and up, and every day there's a new war. And these will affect the supply lines, which affect the bottom line of every corporation in America. And when you start seeing that in the earnings reports, you're going to see a big market crash. I don't like to be the bearer of bad tidings, but really when you get skill sets like we teach at TRADEway, you learn skills that give you the potential to make money when the market's moving down. So all of a sudden the down market's not a bad thing like your neighbor thinks it is. And think about it. Money never disappears. It just exchanges hands. It doesn't go away. I love it when they write articles like, well, we just had $50 billion lost from Wall Street today in this market crash. That doesn't happen. It's not lost. Someone else has it now. Someone that knew how to make money when the market was moving down got that money. So if you think this has been helpful, just click the links below in the description. I really enjoyed being with you today, and we'll see you next time.